Using artificial intelligence to invest and make money is one of the most talked about developments in finance today. And understanding how to leverage AI effectively requires knowing what the technology can and can't do, how different tools work, and how to manage the risks that come with automated decision-making and algorithmic analysis. At its core, using AI for investing means feeding complex market data, news, sentiment indicators, historical price movements, and financial fundamentals into advanced algorithms that are designed to recognize patterns and generate insights far faster than a human could manually. And these insights can then be applied to stock selection, portfolio management, risk evaluation, and even automated trading. Although it's vital to recognize that AI should be a complement to human judgment rather than a replacement for it, because AI models work by analyzing data and training on past information, and that means they can miss context-specific nuances, unexpected geopolitical events, and other real-world factors that a seasoned investor would consider before deploying capital. So a balanced approach where AI supports analysis, but you still apply critical thinking, is usually the most prudent method. According to financial authorities and investment analysts, AI can process huge amounts of data to highlight potential opportunities that meet specific criteria you set, such as identifying growth stocks in certain sectors or screening for companies with favorable valuation metrics. And you, as an investor, can then use these suggestions as a starting point for deeper research and considerations about your own investment goals and risk tolerance. AI tools can also help build or rebalance a diversified mix of assets by recommending optimal asset allocation based on your personal risk profile, time horizon, and investment objectives. These recommendations are often informed by machine learning models that weigh current and historical data to give you a clearer picture of how different portfolios might perform in future market conditions. This means that whether you're a beginner looking to set up a long-term investment plan or an experienced investor seeking additional analytical horsepower, you can use AI to enhance your ability to evaluate a wide range of securities and strategies quickly, and with more data than you could reasonably digest on your own. Some AI platforms provide algorithmic trading capabilities, where predefined rules and signals generated by machine learning models trigger buy and sell decisions automatically. This can be helpful for active traders who want to capitalize on short-term price movements, or for investors who prefer hands-off strategies where trades are executed on their behalf around the clock. But it also introduces additional risk if the rules aren't well calibrated or if market dynamics change rapidly. One of the major categories of AI investing tools is robo-advisors, which use algorithms designed by financial professionals to automatically manage your portfolio with minimal manual intervention, often offering features such as automatic rebalancing, tax loss harvesting, and diversified exposure to broad market segments, all of which can help optimize your long-term returns while reducing costs compared to traditional financial advisors. In practice, investors use AI for functions like screening stocks, building custom indicators without writing code, testing trading strategies by backtesting them against historical data, and generating performance reports that include measures like risk-reward ratios, profit factors, and win-loss rates, so you can evaluate how well your investments are performing and adjust your approach accordingly. AI tools can also provide sentiment analysis by scanning news headlines, earnings reports, and social media trends to gauge market mood, which can further inform your investment decisions and help you stay ahead of potential risks or opportunities. There are a wide variety of AI tools available in 2026 that serve different investor needs, ranging from platforms that offer predictive analytics for stocks and crypto assets, to robo-advisors that automate portfolio management, to specialized AI assistants integrated directly into brokerage apps that can answer complex financial questions via natural language and help you construct personalized portfolios. And some tools even allow you to create custom indices or invest in thematic baskets of securities using AI-generated insights. What all these systems share in common is the ability to quickly process data that would take human analysts many hours or days to compile, giving you a powerful edge in terms of information processing and speed of insight generation when making investment choices. For example, stock screeners powered by machine learning can analyze thousands of securities to identify trend patterns, breakout signals, or potential target prices based on technical and fundamental analysis, while AI-enhanced portfolio management platforms can recommend a diversified mix of ETFs and stocks that align with your goals. There are also crypto-focused AI tools that provide price predictions, sentiment tracking, automated bots that execute trades on your behalf, and portfolio tracking features that help you monitor risk and diversification, all of which can be particularly valuable in highly volatile markets, where rapid shifts in sentiment can create both opportunities and hazards. Despite the promise of AI, it's important to be aware of the limitations and risks. No AI model can guarantee profits, and some experts caution that the world's financial systems are too complex for algorithms to consistently pick winning stocks or outperform human judgment in all market conditions, especially during unusual or unpredictable events. So relying blindly on AI without understanding the underlying rationale or broader market context can lead to poor decisions or losses. This is why experienced investors typically use AI as a tool to augment, not replace, their own analysis, blending data-driven insights with fundamental research and an understanding of macroeconomic conditions. Another risk to consider is that AI tools sometimes operate as black boxes, where the logic behind recommendations isn't fully transparent, which can make it harder for you to trust or audit the output. And issues like data privacy and cybersecurity also come into play since these platforms collect sensitive financial information and may share it with third parties. Investors should therefore choose reputable tools with strong security practices and be cautious of any service that promises guaranteed returns or appears overly focused on marketing hype. To use AI effectively for investing, many successful practitioners start by familiarizing themselves with several tools to see how each one works and what kind of insights it produces. Comparing outputs from different platforms and cross-checking them against traditional analysis methods. They might begin their process by setting clear investment objectives, using AI screeners to generate a list of potential opportunities that meet their criteria, and then applying fundamental and technical analysis to those opportunities to verify their viability before allocating capital. For long-term strategies, investors often lean on robo-advisors to manage diversified portfolios and handle routine tasks like rebalancing while using AI news and sentiment tools to stay informed about broader market developments that could influence their holdings. Some advanced investors build custom AI ecosystems by using open-source models or platforms that let them train their own predictive systems on historical price data and financial indicators, allowing them to tailor the model behavior to their unique risk tolerance and investment style. But this typically requires more technical expertise and ongoing maintenance to ensure the models remain aligned with current market conditions. For most retail investors, though, turning to established AI-powered investment apps, brokerages with built-in AI assistance, and robo-advisor services offers a practical way to leverage the power of machine learning without having to reinvent the wheel. Overall, using AI tools to invest and make money involves understanding the strengths and limitations of the technology, setting clear goals, integrating multiple sources of insight, and always applying your own judgment to interpret AI recommendations. Because while AI can help reduce research time, highlight patterns you might miss, and automate routine tasks, it cannot eliminate market risk or replace human context. So the most successful investors are those who use AI as a force multiplier for their own analytical skills and disciplined investment process. In summary, using AI tools to invest and make money is ultimately about improving decision quality rather than chasing certainty. Because financial markets remain complex, adaptive systems shaped by human behavior, policy decisions, and unexpected events that no algorithm can fully predict. Artificial intelligence offers a structural advantage by processing vast amounts of data, identifying probabilistic patterns, and enforcing discipline in areas where human investors are most vulnerable, such as emotional decision-making, inconsistent execution, and information overload. When used correctly, AI shifts investing away from reactive guesswork toward a more systematic and repeatable process, helping investors evaluate opportunities faster, manage risk more objectively, and stay aligned with long-term goals even during periods of volatility. The real value of AI lies not in promising extraordinary returns, but in reducing avoidable mistakes and improving consistency over time, which historically has been the strongest driver of sustainable wealth creation. Investors who treat AI as an analytical assistant rather than an oracle tend to benefit the most, combining machine-driven insights with human judgment, macroeconomic awareness, and personal risk tolerance to navigate markets more intelligently. For practical implementation, a focused ecosystem of AI tools is far more effective than relying on a single all-purpose platform. Robo-advisors such as Wealthfront and Betterment remain among the most robust AI-driven options for long-term investors, using algorithmic portfolio construction, diversification, and automatic rebalancing to deliver disciplined exposure to global markets at relatively low cost. For equity research and market intelligence, platforms like AlphaSense and Kavout apply machine learning to earnings calls, financial statements, and macro data, helping investors uncover patterns and risks that traditional analysis can miss. Active traders often benefit from AI-enhanced strategy platforms such as TrendSpider and Trade Ideas, which use pattern recognition and historical backtesting to validate trading ideas before capital is deployed, reducing reliance on intuition alone. In the digital asset space, tools like Sentiment and Coinmetrics provide AI-assisted sentiment analysis and on-chain data interpretation, offering structured insight into markets that are otherwise driven by extreme volatility and narrative momentum. General-purpose AI models can also serve as powerful research companions for summarizing reports, stress-testing assumptions, and clarifying complex financial concepts, provided their outputs are treated as starting points for analysis rather than definitive conclusions. Used with restraint and critical thinking, AI does not replace the investor, but strengthens the investment process itself, enabling a more informed, disciplined, and adaptive approach to building wealth in an increasingly data-driven financial world.